Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts and I'm joined by Dan Innes, Giles Barry and Nicole Dines this week. Nicole, let's start with you. What's your pick of the stories?
Well, real asset media held two briefings this week. One was on student housing post-pandemic, and there seemed to be optimism and relief really all around. Bonard research that showed that there were no divestments. Figures for volumes were the same, 2.5 billion last year as the year before. Occupancy rates most significantly stayed incredibly high, between 80 and 90% in the UK and over 90% in Continental Europe. Looking ahead to the next academic year, prospects look very bright. Both Stuart Moore, the CEO of CRM Students, and Dan Baker of Student.com said that their bookings for the next academic year are actually up on 2019 levels. So they're very optimistic about turnout. And it boils down to the fact that students are really keen to go back to accommodation, to stay with their peers, and universities are very keen to return to face-to-face tuition as soon as possible. So great optimism all around, and first-year applications have increased by double figures for the next academic year. So definitely bright prospects there. The other briefing that Real Asset Media held was on France. Again, it's been held back, the market, by the lack of international investors. South Koreans, Americans, and Middle Eastern investors are very keen to invest again in the market. There's a wall of capital waiting to be deployed, but obviously the travel restrictions have held them back. But there's a feeling that as soon as the restrictions are released, then there will be many investors coming back. And there's a lot of interest in the office market, a lot of question marks over the office market as well, because as we know, Paris is the biggest office market in Europe. And so the future of the office is very important, particularly for the French market. But there's a feeling that people want to go back at least a few days a week. So there's a sense of optimism that things will get back to normal once the vaccination program is rolling out properly. And there's a lot of also interesting conversions to residential, old office buildings that are now obsolete. They could be turned into resi. There's a great demand for resi. But there are problems, everyone pointed out, there are problems with the cost of it and the sort of tricky regulations. So it's quite a difficult field to navigate. And the other big theme in the French market, as in other markets, indeed, is ESG, which has become very much front and center for everyone, for investors and lenders as well. So that's become a big theme in the market. But there are problems, for example, the whole Haussmannian buildings in the center of Paris are very tricky to turn into ESG compliant buildings. So that's a challenge for the market. But on the whole, a sense of optimism that the market has turned a corner.
I also noticed the Korean Economic Daily had put a piece around Korean investors in a renewed push for global property deals, which was interesting. INREV also mentioning that property's global assets under management hit 3.3 trillion euros as well. And also just an indication of I suppose, the growth of a focus on real assets was Manulife hiring Christoph Schumacher for a new global role in terms of real assets. And also a lot of discussion there about the French market with it reopening, and interesting figures for April in terms of retail for the UK, with sales really soaring, particularly for the London market. So maybe an indication of what to expect elsewhere in Europe as the unlocking begins to happen across the continent. Giles, what have you been following?
Well, first of all, Nicole, fascinated that you said that students are wanting online tuition to go. I could not agree more. My son's about to start at Leeds University, and they are, my daughter's at Liverpool, sick to the back teeth of online tuition, and I don't think it's got any room, barring disaster, for carrying on. So I had to get my word in there, Richard. Secondly, Land Securities results, always a big moment in the real estate world. They announced a heavy loss, which wasn't a great surprise, but there are some interesting tidbits in there. Mark Allen, the newish chief executive, talking about dipping his toe back into the water of the shopping centre investment world, where values have fallen up to 30, 40, 50%. He's seeing value there. As you said, we've just seen April's ONS retail figures up 9.6% in a month. And I'm a fan of actually of retail parks, which can be repurposed for fulfillment as well. A couple of really interesting features in the FT and Bloomberg this week. In the FT, George Hammond, and in Bloomberg, Jack Sidders both wrote very big pieces on net zero and offices, and how the best offices built by the likes of British Land, Helical and others will bifurcate, to use the common parlance. Tenants, customers will want to go into those, and the others will fall away. So that was reflected partly in Great Portland's figures also out this week, where they talked about ploughing a lot of money into net zero sustainable offices.
Yeah, that ESG side also came through last week in terms of the debt finance event that we had with Norbert Kellner of Berlin HIP, just saying that it's a great story and an interesting opportunity for us on the lending side to drive that change towards ESG conformity by financing the switch from brown to green assets. So it's coming from both sides there in terms of the investor, the occupier, as well as the financing side, which is interesting. Dan, what have you been watching?
Yeah, I mean, like Charles said, I mean, I think we've all been following the re-emergence of retail and some of these results that have been coming through in the last week. And I think principally, as Charles said, the results are reflecting those challenges caused by not just the pandemic, but those restrictions. Landsec's income, it plummeted by over 30% to £165 million in terms of net rental income. You know, the shopping centre value really at Landsec, that's particularly hard hit with a 38% fall in values. But I mean, Mark Allen, the chief exec, he's insisting that, you know, despite that loss, the group's proactive approach, that's going to lead to long-term growth and recovery, which is a great sign for all of us, really. Everybody is operating within that shopping centre sector, really looking to kind of reimagine what retail looks like with a kind of a more multi-channel approach. But, you know, it's kind of encouraging, really, to kind of see the relish which, you know, people are returning to to experiential retail. I've been back in the West End this week myself. The shopping streets are busying up again since the UK opened last Monday. You know, I think just at the very end of last week, we began to see signs of that. You know, we saw Ardent exchanging on Touchwood in Solihull from Lend-Lease. You know, that's a major shopping centre asset. So I think we're going to start seeing more of those kind of deals coming through. This week, we also witnessed the rising importance of ESG. Qatari DR, they secured a 450 million green loan. And that's one of the largest single property asset green loans ever in the UK. That loan's going to finance the construction of that Chancery Rosewood development in London's Grosvenor Square. That's a luxury retail and hotel scheme. Both sectors that, of course, have seen a bit of a battering over the last 12 months. So incredibly encouraging to see people putting money back into that. We've also seen Allianz Real Estate. They've invested in Icklewood redevelopment in Paris. So they've been granted 78% of a £185 million loan alongside BNP Paribas to this Icklewood project for the completing and restructuring operations. And that kind of demonstrates, again, this confidence, not just in that fund, but also the funds that specialise in low carbon emission developments in the office sector. Finally, in news from another parallel universe, we're seeing the rise and importance of a multi-channel approach with real estate is to go to the luxury brand Gucci. They've previously installed a physical recreation of their most amazing advertising campaigns, but they've now expanded that focus into Roblox, which is that metagaming platform. And they've put that into a virtual 2-week art installation that allows customers to try on and purchase digital Gucci items, so almost like a virtual store. So they're really challenging the market there and looking at attracting some very young new customers. But to that end, though, many luxury brands are racing to stay on top of the gaming and metaverse ethos and just to drive sales, not just in stores, but also online.
Yeah, interesting to see the way digitisation is really coming to the fore at the moment. And we're certainly noticing this in our events and the RealX.global platform. I also saw, in terms of innovation coming to the market, IPSX, the International Property Securities Exchange, which is designed for single real estate assets, went live with the launch of Mailbox REIT PLC. And Mailbox owners M7 look set to float a second asset. So this could also be one to watch in the coming weeks and months. Thank you, Giles. Thank you, Dan. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the week in real assets.